Hello and welcome. You're watching The Money Show, and it's a very important segment of Women's Wednesday that we get every Wednesday for you, where we focus on women financial planning, women investors financial planning. We help you navigate all your investment strategies, align them with your financial goals. And to help us today, we have with us Harshvardhan Roongta, who will be answering your portfolio queries. Harsh, hi, good evening, and welcome to the show. Women's Wednesday, we've got women all across from the country sending us their queries. And the first one is from Ms. Janki. She works in post office, and she wants to accumulate almost 1.5 CR to get her daughter married, and she's investing some money. She's investing in SBI Contra and 5,000 rupees, and 1.5 CR is the corpus that she wants to accumulate, but she can also add a few more funds, and she's also having a PF amount with her, although she's not mentioned what's the figure over there. But then overall, that's the goal after 18 years she has put up for herself. 18 years of time, quite a lot of time for her to accumulate money through equity. What do you recommend? And I don't know if SBI Contra is her first fund, but then just in case that is the first fund for her, how is it? And along with that, should she be adding more funds?
Hi, Kavita. Kavita, this is a very interesting case because this demonstrates the demographics with which, in which the people have now started accepting investing through SIPs, investing for long term. So, Janki is a post office employee. So, usually, I'm talking about a decade ago, when the awareness for mutual funds were not as much, probably, we would see that people working in the government sector, especially in the post office, etc., would very heavily rely on post office or the small saving deposits. Now, assuming, Janki has come out of that and now she's investing for, say, a long-term period. She has 18 years of time horizon. She's thinking well in advance. She's already started in SIP. I think it's a very, very good approach. And this is the right way of creating wealth over long-term periods. Those small saving schemes, post office deposits, etc., have a very, very significant role to play in personal finance. For long-term goals, you have to invest in areas which have a potential to beat inflation. So she's absolutely, demonstrating the same kind of behavior, which is very, very encouraging. Coming to her, portfolio, her current investment is 5,000 rupees. Now, if we were to calculate the returns at about 12%, 18 years from now, she can expect about 37 lakhs. Though her target is 1.5 crores, so most naturally she will have to increase her investments, and it would have to go up to 20,000 a month. No problem, as long as you can invest whatever you can invest. I think that should be the approach as of now. Try and come as close to possible as to your target, whatever you can achieve. If not 1.5, you can come stretch yourself to at least 1.2 crores. I think that would be a good achievement. So SBI Contra Fund is good. Most certainly she can continue with that. In addition, if she's planning to increase her SIPs, I can make a portfolio for her with 4 schemes. Now, in these 4 schemes, she need not add all the schemes today. She can obviously keep adding them as her SIPs go up. So one is SBI Contra Fund, which she can definitely continue. She's already investing in it. The other 3 funds that she can include in her portfolio going further would be Parag Parikh Flexi Cap, Nippon India Multi Cap, and White Oak Mid Cap Fund. Make it a habit, Janki, to review your portfolio once in 2 years. So every 2 years, just go look back at your portfolio, whether it is doing exactly what you were planning, you were hoping it would do. If there are any changes, then you can make those kind of alterations in your portfolio at that point in time.
All right, let's move on. Let's take Gayatri's question. And she says that she's doing a job, and she wants to be an entrepreneur. She wants to start her own business, and she needs 20 lakhs for that in 5 years. And she's doing SIP in Parag Parikh Flexi Cap, Kotak Multi Cap, almost 6,000 and 4,000, 10,000 rupees and investment going on. But Gayatri, to help you, decide on your business and maybe help you accumulate the corpus for that, we would need slightly more details from you in terms of investment amount, if at all, what are you looking at beyond 10,000 rupees. Although, the time duration is 5 years, Harshi can't even take a lot of risk. But having said that, there are a lot of loan available, for women, especially who wants to take the first step towards achieving their life goal, which can be of becoming an entrepreneur or starting something on your own. There are a lot of banks who support, and a lot of groups also actually help you to even crowdfund. So that can be one of the options, just in case you are not able to accumulate 20 lakhs. But having said that, how much do you think she'll be able to accumulate, Harsh?
So, well, Kavita, you rightly mentioned that, the 5 years is a little less time horizon when compared when we're looking at investing in equity funds. Usually, the equity fund investment time horizon from starting point should be at least 8 to 10 years. Nevertheless, she can invest into equities for a simple reason that her goal is very aggressive. So she will have to even create an investment portfolio which is very aggressive. Otherwise, she will not be able to accumulate the kind of target that she's looking at. So if you were to just do simple numbers of what she's investing today, which is 10,000 rupees a month, if we were to again assume it growing at about 12%, though it is for 5 years, but we assume a return of say 12%, she should expect about 8 lakhs after 5 years, wherein her target is that she wants 20 lakhs. So, well, clearly she will have to increase her investments. We will also assume that the investments over a period of 5 years will generate 12% kind of returns. If any of these two things don't happen, then the target could be, I mean, the accumulated corpus could be much lesser than what she's expecting. With regards to the existing schemes that she has, I think both her schemes are very nice. She has one Parag Parekh Flexi Cap and a Kotak Multi Cap. I don't see any reason to make any changes. If she wishes to increase her investments, well, I would suggest that she could increase it into these two schemes itself. She need not essentially have one more scheme in her portfolio just for the sake of it. However, I still give her two choices. One is that if she wishes to increase her allocation in equities, she can definitely increase it into these two schemes itself. If she is more aligned towards a hybrid scheme, because the time horizon is 5 years, she has an equity debt mix with a dynamic asset allocation kind of a strategy, then she could look at a ICICI Pru Balance Advantage Fund. So this will add some bit of debt and some bit of equity debt combination hybrid product in a portfolio. So she'll have two equity funds and one hybrid fund, or she can even just keep the two hybrid equity funds and increase her investments over there. But at any point in time, just ensure that you don't have more than three schemes. I don't think you need more than three schemes for this particular goal for 5 years.
All right, let's move on, and let's take other question. This is from Lakshmi Sahu, and she's from Kolkata. And she wants to start an SIP of 30,000 per month for 12 years. Target is 2 CR. She's 36 years old, and she's also an aggressive investor. So that's great, Lakshmi. You're able to figure out your risk profile. Not a lot of women investors are able to do that. So congratulations. But having said that, 30,000, 12 years, and 2 CR. How should she start with?
So the first thing, Lakshmi, is that you're looking at accumulating 2 crores after 12 years. So if I were to just assume a 30,000 growing at 12%, which is the AMFI-mandated illustrative calculations that you can do, if you assume a 12% kind of a returns over the next 12 years, with a 30,000 every month, you should expect about 95 lakhs. Now you want 2 crores, so most certainly you will have to double your investments, at least double. It comes closest to 2 crores at that point in time. You mentioned that you are an aggressive investor. So what I've done is I've included two mid cap funds in your portfolio. One is a factor based mid cap and one is an active mid cap. I'll give you the entire portfolio that I have in mind for you. One is of course Parag Parekh Flexi Cap, which is the large cap oriented Flexi Cap approach. The two mid cap funds, one factor based would be Edelweiss Nifty Mid Cap 150 Momentum 50 Index Fund. The active mid cap I've added is White Oak Mid Cap Fund, one multi-cap, which is Nippon India multi-cap, and one value-oriented fund, which is an SBI Contra fund. So again, just repeating that you've mentioned that you're an aggressive investor. So I've made a portfolio which is a little high on volatility. In case going further, you find the volatility to be way above your tolerance level, then most certainly feel free to make alterations in the portfolio at that point in time. However, this portfolio currently has been designed keeping 12 years in mind, keeping that you mentioned that you're an aggressive investor and you have an aggressive target as well. So I've given you five schemes. You can continue investing into them as long as you can handle the volatility. If you at any point in time feel uncomfortable, please make changes at that point in time.
All right, so that's something that Lakshmi you need to really factor in, and well, I just hope Harsh that 2 CR is actually the enough amount for whatever financial goal she has lined up for herself. Because a lot of time what happens is at the current stage the corpus that you want to accumulate looks really huge, but ultimately when the time comes closer, and when you are actually at the stage when you are realizing that goal, the amount looks really not enough for that particular financial goal, if at all that is one. How can she align it and make it much more practical for her?
This, Savita, is in fact a very, very good point that you brought out because, when we usually interact with investors, we have one lump sum figure that comes out to say. They would say, look, I want, say, 5 crores, I want 2 crores. It's a very random number, which more is something that they want rather than which they require. So, two things have to be kept in mind. Whenever you're planning for anything to be received in the future, you have to have not today's value, but you have to assume an inflated value. So, which means whatever you can do with, say, probably 1 crore today, and if you need this money after, say, 10 years, it's not going to be 1 crore worth. With inflation, this amount could be higher. In fact, will be higher, but it could be, say, 2 crores or 3 crores for that matter. So whenever you are estimating anything that you require in the future, please incorporate inflation into that calculation and then you arrive at a target. This will help you be more realistic about what you will do with that money when it eventually comes in or when you need it. So, for example, if you're planning for retirement, so inflation becomes very important because cost of living keeps going up on year basis. So you will have to assume an inflation rate, a rate of inflation at about say 7%. Though I mean, many would argue that the RBI reported numbers are much lesser. But in fact, individual inflation, if you were to look, which includes lifestyle and other things, I think 7 or 8% would be a safe assumption to take for inflation numbers. In case it's for education, then you must understand the education inflation is very different from a CPI. So the fees would go up exponentially. It's not necessarily going to be the rate of CPI. So you will have to include inflation at the rate of probably 12% for that matter. If it's for medical emergencies that you're planning for, then inflation would be 15% or so. So these are the factors that you'll have to keep in mind when you're planning for something in the future. Do not only simply come with a random number which you like to hear and listen or talk about. Think more practically, go a little deep, digging deeper into this. Get to a realistic number as much as you can. And then if it varies, of course, then you can't do much. But at least try at the time of estimating future values, incorporate inflation, incorporate the time horizon, incorporate the use that it is going to be put to in the future.
Okay, let's move on and let's take Deepika Kaware's question. And she said that she's 27 years old. The target is 5 CR, and time is 15 years. And she's got Parag Parekh Flexi Cap, Motilal Oswal Mid Cap, Quant Small Cap, and portfolio value is 3 lakhs. And she's doing an SIP of 40,000 monthly. All right, she really wants you to review the portfolio and also help her align. Okay, the funds in terms of market cap category look good.
So, well, Kavita, I think the flexi cap that she has and a mid cap that she has is fine. I just would feel that instead of a pure small cap fund, she should add a multi cap fund. So she would have probably a small cap allocation, but through a multi cap fund. I think that approach would be better. So, my suggestion would be to stop the quant small cap fund and include a Nippon India multi cap fund. Having said that, if she is comfortable with the pure small cap in her portfolio and she understands the volatility that is associated with this category, she may most certainly continue with it. However, even within the small cap, I have other preferences which I can recommend to her. She could look at a Bandhan small cap or a SBI small cap. I think these schemes, in my opinion, function better than the quant small cap. However, these are just suggestions. If she's happy with what she's doing right now, she may most certainly continue. I have an observation also to make onto the corpus that she wants after 15 years. So, well, if I was to just estimate the future value of all her investments, the current portfolio value today plus the SIP that she is doing, then 15 years later, she can expect about 2 crores to 2.15 crores. So that's the kind of estimation that she has. that she can expect her corpus to be, to her investments to accumulate to become, she needs 5 crores. Well, unfortunately, all the queries that we've answered till, in today's show, I've not been able to, give good news to anybody saying that whatever you're estimating, you will get it. The previous query had a requirement for 2 crores and she was not achieving it. This query has a requirement for 5 crores, but she's achieving 2 crores. So, well, I guess somewhere investors will also need to moderate their expectations out of equity mutual funds. I have a feeling people believe that if I'm investing 30, 40,000 rupees a month, I can accumulate sums equivalent to say 4, 5 crores in future. Well, I think you should realign your estimations from equity markets. AMFI, as a association of mutual funds body, suggests that you estimate at the time of making calculations, you estimate about 12% returns over long term. Then you'll get a fairly good idea of what your funds could give you in future. In case they give you more, it's always welcome. So I know in a situation like this where you've estimated 12% and you made investment plans accordingly, and fund lands up giving about 14, 15%, then it's good for you, right? But if you estimate about 15% and the fund delivers about 12%, then you could be way below mark, and that could disturb a lot of things in future. So when making estimations, be conservative. If you get a higher return, it's very, very good for you, and everybody will be happy. Don't do the other way around.
All right, let's take one more question, and this is from Komal Gupta and Jamshedpur. Okay, so she wants to understand SIP and how much and where should she be investing. The goal is to CR in 15 years. So, Komal, welcome to the investing journey, and thank you so much for trusting the Money Show and helping us. Help you. Great. Congratulations on that. And, very good thing is that you've identified your time frame, you've identified the corpus that you want to accumulate, and you've also, you're planning to start this journey through SIP, and that is the right way to go, especially if you're someone who's new to the equity markets and also someone, who wants to start small. So the benefit of SIP, as we all know, the pocket SIP, even with 100 rupees, you can start your investment. So yes, that's a very good green flag for you. And how can you start with what kind of funds, and how can you, gradually increase your investment amount once you gain more trust and confidence on the equity market? Harsh is going to help you with all of that. But Harsh, along with Komal Gupta, I would really request you to help our other viewers as well, people who don't understand mutual funds. There are a lot of people, Harsh, who understand direct equity, they understand stocks, but when it comes to mutual funds, it's lack of information, or maybe sometimes people don't find it very exciting, which is also the reason why they don't go deeper in understanding the investment instruments. But having said that, for a beginner and for someone who also is slightly risk averse, mutual funds definitely, gives you fantastic investment options across category, whether it's equity, debt, or any other asset class. So along with Komal, all those viewers who just want to understand what are mutual funds and how can SIP help you. We know SIP works magic, whether you are doing an SIP in mutual funds or even in stocks, because if you don't have huge chunk of money, this is the way. Small installments is the way to start investing. So yeah, over to you.
Yeah, absolutely right, Kavita. I'm glad you brought this up again. Let's understand one very clear, objective. In the long term, if you want to create wealth, you have to invest into instruments that have a potential to beat inflation. So if cost of living keeps going up every year, for individuals again, not the officially reported numbers, if cost of living keeps going up every year for individual families to the extent of say 7 to 8% or 10% for that matter, and you are saying that I don't want to spend that money today, but I want to save this money somewhere so that in future I can use it, which means that you have to invest into a place which will generate more returns, or at, worst case scenario, at least inflation, number returns. So if inflation is going up by 8%, at least you have to generate 8% so that money retains its purchasing power. If you're going to invest in a product that generates say 4, 5, or 6% post tax, you've actually lost money. Why? Because what you could do with that money today, you're not going to be able to buy the same thing in future. So what's the point of saving for future? So the first rule that you have to keep in mind very clearly is if you're saving for future, you have to invest in a product that has a potential to beat inflation. Only then you are creating more money for yourself in real terms. Now, second element is in the quest of earning more returns, you should not get carried away and invest into extremely risky products or products which you don't understand. So equities, investing into direct equity is not something that you do for pastime. Investing in equities is a very, very specialized field. You have to understand a lot of factors that before considering which company to invest, when to invest, and when to exit out of it. Now, typically, a person, a retail investor from varied backgrounds do not have that kind of expertise. In fact, people take their entire lifetime to understand equity markets. So, as a newcomer, to expect that I will make money out of stock market, I think you'll be very lucky if you make money immediately when you get into the market. It is a very, very long, lengthy process to create wealth. And there are professionals who can do that for you. Now, that professional organization is a mutual fund. There, the entire organization is dedicated to only studying the markets, investment opportunities, timing the entries and exits, etc. Now, as a retail investor, if you have this facility available where a professional fund manager with years of experience is offering you this service at a very nominal cost, I'd rather grab it. So, I would recommend all new investors to avoid direct equity markets. Go invest into equity markets through professional fund management teams, which are mutual funds. There you have the entire gamut of products available. You have large cap, mid cap, small cap. And we've spoken about it several times. You have absolute, diversification available. Kind of schemes that are available is there for every investor type. So explore that area and just leave it at that fund manager to do their job, which they're very good at. I think that's the approach that if you take the steps in the right direction, you will certainly make money over a longer period of time. Coming to Komal's question, she wants to accumulate 2 crores after 15 years. The amount that she would need to invest, if we were to again assume that 12% returns, she would need to put about 40,000 rupees every month to accumulate 2 crores. I'm just hoping that we're not able to speak to her, but I do hope that when she listens to this, she has the potential to invest 40,000. So at least one query in this show will know is on their way to achieve the target that they've set for themselves. Now, being long term, 15 years is what we're talking about. I already mentioned that you need to invest into products which have a potential to beat inflation and create wealth for yourself. So I think she can most certainly invest in equity funds because she's also choosing to invest via SIP. I can make a portfolio for her, model portfolio right now for her, in which she can continuously invest going further. She does not need to add too many schemes. 5 schemes I'm recommending, which more or less represent the entire market, and she would have exposure into the entire market segments. So ABSL Nifty 50 Equal Weight Index Fund, Motilal Oswal Nifty Mid Cap 150 Index Fund. So this is a passive fund which is investing into the Nifty Mid Cap 150 companies. I'm also giving an active mid cap fund, which is White Oak Mid Cap Fund, a multi cap, which is Nippon India Multi Cap, and a value oriented fund, the SBI Contra Fund. So she can just create a scheme basket of 5 schemes and continue investing irrespective of the amount. This kind of gives her an exposure all across the market segment.
All right, I think with that, it's a wrap. Thank you so much, Harsh, for being on the show and helping our women investors align their investment strategies with their financial goals. But for all those women viewers, just in case you want our help to help you align your financial portfolio or investments, you need our experts' advice or recommendations or strategies, or just want to get your portfolio checked, you can send across your questions on our WhatsApp number and also the email ID that's flashing on the screen, and we shall help you with your financial portfolios. Every Wednesday, we get Women's Wednesday for you. Thank you so much for watching The Money Show today. Goodbye.